Well, folks, it's time to kick it old school. So you can feel cool. Yeah.
Hey, what's up everybody? Welcome to Ali's World of Finance. I hope you're all having a fantastic day. Today we're going to be talking about the three biggest stocks that I'm invested in: Nintendo, AMD, and Disney. The last time I made one of these videos was back in like September or something, so it's been a few months. It's definitely been a long time since I've given you guys an update, so this video is long overdue. Now, if you want some more detail on these three stocks, feel free to check out my other videos that I've made in the past where I go into huge amounts of detail on these three stocks, and I'll have those linked in the description below. But for this video, I'm just going to give kind of an update on these three stocks, how I feel about them at the moment, and some recent news going on with these three stocks. And so it's just going to be more of like an update. But anyway, if you guys want to add anything to anything that I say, if you want to add anything, just make sure to leave a comment below. So anyway, let's go ahead and get started, and let's talk about Nintendo. Now, Nintendo has been on an absolute tear since I started investing in it, and it's easily been my most profitable stock. So let's go ahead and take a look at the charts here. So looking at the 1-year chart, we can see that Nintendo stock is up over 116% since January of 2017, and you can see that it dipped a little bit going into 2018, but now it's been climbing again, and it's currently at $56 last time I checked per share, and we'll talk about the reasons why it started climbing up again. Looking at the 5-day chart here, you can see that had a pretty good week this last week, up 2.39%, and you can see that year to date we are up 24.12%. Now, because Nintendo stock is having such huge success at the moment, I do feel like I'm starting to get really close to a sellout price, and we're going to talk a little bit more about that in a second. But we know that when Nintendo had the Wii, they were having a lot of success with that gaming console for Nintendo, and their stock price was in the high 70s. Well, I've stated many times that I think Nintendo's newest gaming console, the Nintendo Switch, will sell even better. And the reason I think this is because the Nintendo Switch is a hybrid console that can appeal to both portable gamers that want to play anywhere and home console gamers or couch gamers that want to play on a big screen TV by setting the Nintendo Switch down in its dock and projecting everything onto their big screen TV and playing with a traditional controller. On top of that, Pokemon is one of the biggest selling game franchises of all time, and its core game developer, Game Freak, has already stated that mainline core Pokemon games will be made for the Switch going forward, which is the first time in history that those games will be made to play on a big screen TV, which is something that the gaming community has absolutely screamed and begged for many years. And this Pokemon game is rumored to come out in late 2018 or early 2019, and that should help drive Nintendo Switch sales even further. Now, speaking of sales, the Nintendo Wii sold an insane amount of consoles at over 100 million consoles in its lifespan. Their follow-up, the Wii U, sold only around 13 to 14 million consoles, and now the newest console, the Nintendo Switch, has already sold over 10 million consoles, and that's in less than just 1 year compared to the Wii U's lifespan of over 5 years. And yes, the Wii U was a complete failure, but the PS2 was one of the best-selling game consoles, if not the best-selling game consoles of all time, and the Nintendo Switch has already outsold the PS2 in Japan in terms of first-year sales. So that's also another really positive sign as well. Now, if that's not enough to convince you, the Nintendo Switch is even the fastest-selling game console in United States history in its first 10 months, even beating out the hugely successful original Nintendo Wii. Now, if we look at game attach rates for those numbers, and these are games developed and published by Nintendo, so just adding revenue to Nintendo, we can see some really good attach rates for games and the Nintendo Switch. So Super Mario Odyssey is at over 60%, Legend of Zelda Breath of the Wild at over 55%, Mario Kart 8 Deluxe at over 50%, and Splatoon 2 is over 20%. And this is all just in the first year, right? We're not even at a full year yet. Now, on top of that, Nintendo's president stated in an interview that they plan to sell 20 million Switch units in 2018, which would be double the 10 million of 2017. So they are definitely moving forward with a ton of confidence, and I actually think that these numbers are actually possible because we know that Nintendo has actually been pressuring Game Freak to release this core Pokemon game this year, and that could easily help them reach that goal. And they recently announced Nintendo Labo as well, which I personally think looks a little boring, to be honest, but it's really marketed towards kids and is a great way to sell inexpensive cardboard for nice profits. Now, before I start wrapping everything up with Nintendo, I just want to add one more thing. The video game industry as a whole closed 2017 up 18% year over year, bringing in over $36 billion. So the video game industry is thriving, it's doing very well, and I think it's a great place to be investing in. So that's kind of how I see it, and one of the reasons why I'm investing there. Now, having said all of that, it's no secret that Nintendo stock is up a massive amount already. It's up over 100% in 1 year, right? So I don't blame you if you're hesitant to jump into Nintendo stock. And I also don't blame you if you have Nintendo stock and you want to sell out right now. It's probably a smart move because you've already made tons of profit, and if you haven't invested in Nintendo already, you know what? You might have missed the boat. Okay, so there's really only one reason why I'm still investing in Nintendo, because I've made huge amounts of profit, and you know, to be honest, I probably should be cashing out right now, but there's one reason why I'm sticking around. And the reason why, personally, and this is just my opinion, not telling you guys what to do, but my opinion, I'm sticking around because I feel like that mainline core Pokemon game coming to Nintendo Switch is like my insurance. Okay, so if Nintendo stock drops, I feel that when Pokemon comes out for the Switch, it's going to be absolutely crazy. It's going to drive up a huge amount of hype, and it's going to sell the Nintendo Switch like crazy. And I think it'll help Nintendo stock rebound. Okay, so if Nintendo stock drops, Pokemon is my insurance to help it rebound. Now, if Nintendo stock keeps going up, or it just stays steady, I think that Pokemon game could lift it up a little bit further. So that's the reason why I'm sticking around. If there wasn't that Pokemon game coming out, I'd be cashing out right now and I'd just be taking all of my profits. But because of that, I'm willing to hang around for a little bit longer. But I am getting very close to selling out, guys, and I don't want that to be any kind of a secret. I think about it a lot, and I can't promise you that I'm not going to sell out before Pokemon comes out. I'm just saying that at the moment, I'm sticking around with Nintendo. I'm still investing in Nintendo, and the reason why is because Pokemon for Switch is my insurance. That's just my opinion. Okay, that was Nintendo. Let me know what you guys think about Nintendo stock, and now let's talk about AMD. Okay, now to be honest, AMD and I have had a little bit of a love-hate relationship. Sometimes AMD stock is up a huge amount and I'm jumping for joy, and you've probably seen that in some of my videos. I had a couple live streams where I was, extremely happy that AMD stock was up a lot. And then other times AMD stock just tanks and I feel like an idiot for buying into the hype. So what I've personally done with AMD, and because AMD is so volatile, some people kind of swing trade it, but what I've personally done is I've tried to look at AMD as a long-term investment. So that way I don't get my hopes up too much, and at the same time I lower my risk a little bit, because I do think that AMD does have potential still in the long term. It's just that it's a bit volatile in the short term, and that makes investors a little uneasy. And sometimes investors will buy into AMD stock when it's up a lot, and then it'll tank, and they'll panic, and they'll sell out, and they'll lose a bunch of money, and I just don't understand that mentality. I've held my AMD stock for so long, and there's been so many times where, it's gone up and it's gone down, and I haven't sold out, and that's just the mentality that I hold with AMD. And we'll talk a little bit about where I am willing to sell out, and we'll talk a little bit about price targets for me, but just kind of keep that in mind. For me, AMD is a long-term investment, and if I look at it that way, I definitely lower my risk a little bit, and I lower my hopes and expectations a little bit as well. Okay, now let's look at the charts really quick for AMD stock. So looking at a 5-year chart here, we can see that AMD stock is up over 350% in the last 5 years. That is just an insane amount that it's up, and it's one of the reasons why investors are so scared to jump into it, but it's also one of the reasons why investors buy into the hype and do actually jump into it. Now if we look at the 5-day change, we can see that on Friday, this last Friday, AMD stock was up over 4%, and we'll talk about that in a second because it has a little bit to do with Intel. And currently, at the moment, AMD stock is at $12.95, and year to date, it's up over 25%. Now, in terms of price targets for me, and honestly, I don't even really like using price targets because I just feel like you never really know when the right time to sell is until it happens, right? Sometimes something happens with a company and that tells you that you need to get out. Sometimes the stock goes up a massive amount and that tells you that you should jump out. There's just certain things that happen, and so it can depend sometimes. But personally, my own kind of opinion, just kind of sort of how I think about AMD, or at least how I have been thinking about AMD, is that I would like to see AMD be around $20 per share. If it was around $20 per share, I'd feel much more comfortable selling out. $18 per share would probably be the bottom end of that. Pretty much like the lowest that I'd be willing to sell it at the moment, because I still think AMD has a lot of potential. And then the upper boundary of that would be maybe 25 to 28. But again, all these numbers are just arbitrary because it really just depends. Certain things can happen, and that's when I decide if I want to sell out or buy more or do whatever. Okay, so just keep that in mind. Now, one of the things that I want to talk to you guys about is AMD's upcoming earnings report, which I believe will be on Tuesday the 30th. Now, I just previously mentioned that on Friday, AMD stock was up over 4%, and I believe the reason for this is because Intel just released earnings, and so their stock went up a huge amount. I believe on Friday their stock jumped up over 10% to its highest price in the last 17 years. And you know what they say, a rising tide lifts all boats. And so I think that's kind of what happened with AMD. I think NVIDIA also had a pretty decent day, and a couple other semiconductor stocks also had pretty decent days on Friday as well. Now, what happened with Intel is that they announced a 10% increase in dividends, and they're sort of following this trend that a lot of other companies are doing with this new tax bill, is that they're returning a lot of their money to investors or to their employees. Now, Intel also improved their guidance and announced better than expected earnings. They announced adjusted earnings of $1.08 per share versus estimates of 87 cents per share, and revenue of $17.1 billion versus estimates of $16.34 billion. Now, as a result, Credit Suisse upgraded the stock to outperform and raise their target price. I believe another 20 other analysts also raised their target price, maintaining a buy rating for the stock. Now, this led many investors to think that AMD will have a similar performance in their upcoming earnings, and as long as they answer all the questions correctly during the conference call, I think they should hopefully do well. Now, one thing to keep in mind is that investors have been worried about Meltdown and Spectre, but that's mostly been sent towards Intel. Spectre does affect AMD, but because Intel had such great performance, I'm not really expecting it to hurt AMD too much either. Now, at the moment, we are experiencing a really high demand and shortage for both budget and high-end GPUs, and many analysts expect this trend to continue throughout 2018. And this helped raise prices even higher than they already are, and AMD has already come out saying that their average selling prices of GPUs and CPUs have gone up significantly, so this may also help them beat estimates. Keep in mind that it was recently reported that cryptocurrency miners bought $200 million worth of GPUs in this month alone, and crypto-related GPU revenue was estimated at around $500 million in the fourth quarter of 2017, according to some analysts. Now, a counter-argument to this is that AMD has been cutting down Ryzen prices significantly, and some analysts think that this could end up hurting them. However, I do think that this move is necessary because they need to clear out this old inventory to make way for the new Ryzen processors that are based on a 12 nanometer process, and I believe that these are due out to release sometime in around April of this year. Now, one more thing to keep in mind, I just told you guys a little while ago about the gaming industry doing extremely well. Keep in mind that AMD powers these home gaming consoles like Xbox and PlayStation, not necessarily Nintendo, because the Nintendo Switch is actually powered by NVIDIA, but it is rumored that the next generation of home consoles, Xbox and PlayStation, will be using Ryzen, and so it's very likely that they'll be using Ryzen, maybe Navi, and those are due out maybe 2019, maybe 2020, around that time, and so that could also help them in the future. Remember, I think of AMD as a long-term investment anyway, so video game industry is booming, and this could also be just additional help for AMD. Now, despite having revenue and earnings growth in 2017, AMD stock has generally been very volatile and for the most part has underperformed. So I think that this will be a key upcoming earnings, and a very big, very important one to watch because there has been some issues and some concerns with AMD's consistency. Now, speaking of their upcoming earnings, AMD is expecting a 26% year-over-year increase in revenue at $1.4 billion, and that could place earnings at 5 cents per share, which is significantly better than the loss of 1 cent per share that they announced in the same period 1 year ago. So overall, again, I think AMD is a good long-term investment, but we have to keep an eye on this upcoming earnings, and I think it's going to be a big one to watch. I'm expecting them to do well. A lot of other analysts and investors are expecting them to do well. It's one of the reasons they kind of jumped up on Friday, because Intel performed well, so we'll have to just wait and see, and we'll talk about it more later. So anyway, that's AMD, and now let's move on to Disney. Okay, now first and foremost, Disney is a long-term investment, even more so than AMD or Nintendo. I believe that you can just hold on to Disney stock for the rest of your life if you really wanted to, maybe even pass it off to your kids. But for me, it's definitely a long-term investment. Now, there's many great assets to Disney, and many great things that they have going for themselves, and I've talked about that in previous videos. One thing that I definitely want to talk to you guys today about is their acquisition of a lot of assets from 21st Century Fox, because it's a huge deal, and that's one of the reasons why their stock is kind of rebounding a little bit. So speaking of that, let's take a look at the charts here. So if you look at the 1 year chart here, you can see that they were kind of dipping a little bit, but now they started to pick up again. And if so, 1 year change is just over 3.82%, because they did have that significant dip there towards the end of the year. But now they're rebounding, and so if you look at the 3-month chart here, you can see a 3-month change of up over 14%. So you can see that they're definitely trending upward, and they're doing a lot better now. And then if you look at the 5-day change, it's just up over 1%. But you see year to date up over 4%, and then you see that their price there is at $112.19. Okay, so now let's talk about this huge acquisition that Disney is paying, like, I think it was over like $50 billion to acquire the tons of assets from 21st Century Fox. I think it's like most of their assets. And we're just going to go ahead and assume that this deal goes through and that it doesn't get stopped for any reason. But one of the things that I'm most excited about is that Disney already owns the rights to Star Wars and Marvel Studios, but now acquiring these assets from 21st Century Fox, they will also get control of X-Men, Deadpool, and apparently the first Star Wars movie, because I actually didn't know this, but I guess Disney did not have control of that first Star Wars movie. They had everything else, but for some reason not that one. So this is going to give them full control of all the Star Wars movies, so however they want to package it, and we'll actually talk about their streaming service coming up in a second, so that now they can completely package it into their streaming service. But this also opens up so many doors for them to implement X-Men and Deadpool into their Marvel universe. Not only that, but think about all of the amusement parks and theme parks that Disney owns, and now this will also open up doors to attract more customers with, X-Men style rides and things like that, and attractions, and also Deadpool. So this is definitely a huge deal. Now, you guys might remember that Disney recently announced that they were going to cut ties with Netflix. They were going to pull out all of their content from Netflix because they were going to announce their own streaming platform that would pretty much compete with Netflix. And they said that it would also cost less than Netflix. So people kind of had mixed reactions to this, right? There were some people that were like, okay, this is going to cost less than Netflix. We'll probably get access to Star Wars, Marvel. They were also saying that they were going to make Star Wars TV shows. And then also think about all of the Disney movies and shows that are targeted towards a younger audience. So parents would want to get this for their kids. So there was definitely an audience that thought, okay, this is actually going to be kind of cool. But there was also a side of people that said, I'm already paying for Netflix, I'm already paying for HBO Go, maybe already paying for Hulu, maybe some other, platform. This is getting a little out of control, and I'm paying for too many platforms. I don't necessarily want to pay for all of these different platforms. Well, all of a sudden, Disney brings in all of these great movies and TV shows from 21st Century Fox, and you're talking about a monthly price that's lower than Netflix, with just as good and maybe even better content, and now you're talking about a deal that is just too good to pass up. Now, if that wasn't enough, and I don't know how accurate this is, but based off of some of the articles that I was reading, it turns out that 21st Century Fox actually owns 30% of Hulu, and Disney already owns 30% of Hulu, and if this acquisition goes through, Disney actually gets the 30% from Fox, and that gives them 60% of Hulu, which means that they'll have majority share. So at that point, what does Disney do with Hulu? And we know that Hulu is a very popular platform, and a lot of people would love to acquire Hulu. So what does Disney do, right? Does Disney sell Hulu to, Amazon or Apple or something for a huge amount of profit? Or do they implement it into their own streaming service and make themselves, this platform giant? And then at that point, it's going to be extremely difficult for Netflix and Amazon to, to compete with Disney's streaming platform. Or they could even just let it run on its own and just let it keep running the same way, because Hulu is actually doing pretty well. It started off kind of shaky, but I think recently it's been picking up and it's actually been doing pretty well. So overall, I love the things that Disney is doing. I think that this acquisition of 21st Century Fox is just going to open up even more doors for Disney, and they already had so many doors open, but now this is just more growth on on top of everything that they've been doing. So I'm really happy with Disney at the moment, and again, Disney, long-term investment. I really feel like I could just hold it forever. Just my opinion. So anyway, that's my opinion on these three stocks, my three biggest stocks. I'm not telling you guys what to do, but if you guys would like to leave your opinion and your thoughts on about these stocks, make sure you leave a comment below. I'd love to read them. And if you enjoyed the video, if you want to support the channel, if you want more videos, make sure you hit the like button. And if you hate the video, then hit the dislike button. And with that, I hope that you all have a wonderful, beautiful day and that you take care.